Swayam Prabha. Digital India. Educated India.
Good afternoon, dear students. Today in this particular video, we will be discussing about various types of insurance. What are the various types of insurance? And in addition to that, in the end, we will be having a look at what is online insurance. As you know, in the age of digitalization, everything is going online. We are using IT, we are using information technology in each and every field. So we will also be discussing online insurance. So let us start. So first of all, dear students, I think you know it very well that basically we may classify insurance into two parts. That may be life insurance and the other part may be non-life insurance. That may also be called general insurance. I think you might have heard these words. I am sure that you might have heard these two words. So each and every type of insurance is basically covered under these two basic categories. First is life insurance and second you may say general insurance or non-life insurance. And under non-life insurance, various categories are there. It may be fire insurance, it may be marine insurance, it may be miscellaneous insurance that may relate to home insurance. Again, it may be relating to motor insurance, that is vehicle insurance may be there. So various other types of insurance you will find. We will be discussing these one by one. So now let us start. First of all, life insurance. I think it is already clear to you that what is life insurance. LIC is the major life insurer in our country and that is coming up with its IPO also in a few months. So first of all, what is life insurance? You see, life insurance is not only insurance, it is also some sort of assurance. You know that we are human beings, we are natural human being, and one harsh reality is that all of us have to die one day or the another. We are uncertain about the remaining life. So some certainty is there that that will definitely be there. So we should be prepared about that. We should be protecting our family. What would be there? What would be there? How our family will be doing their day-to-day expenses in absence of the sole breadwinner. So it should be kept in mind. So life insurance is very significant. It is very important for all of us, and we should also try to take at least one life policy, as it provides social security. It provides protection to our family, even in case we are no more in this world. So it provides coverage to our life, and when we have taken a policy and within the time period of the policy, a person dies, then in that case, his or her family will get the full benefit. So life insurance is very necessary. It provides social security to the family, and once a person has taken a life insurance policy and in case his or her death occurs during the time period of the policy, his nominee will get the benefit, and in case maturity is there, he will be enjoying the benefits. Various types of insurance policies are there, and the benefits are provided as per the terms and conditions of that particular policy. So we will be discussing that also. Now, what are the benefits of life insurance? You see, first of all, it provides protection to the family. When the sole breadwinner, when the earning hand, main key person of the family is not there, then what will happen to the family? In case life insurance is there, it is true that we are not in a position to bring back the gone fellow, but even then, some sort of financial help will definitely be provided to the family, and it will be really beneficial for the family members after the death of the sole breadwinner. So it will provide peace of mind. You will be concentrating your mind wholly to your work, as you will be having peace of mind that after my death, my family is fully secure. They will be getting the sum assured, and they will be able to manage their day-to-day living. As we know that in case you are not paying the premium, you will not be able to continue the policy. Your policy will be lapsed. So in that case, in order to avoid such things, you will be saving some money so that you are able to meet the payment of premium deadline in time. So it will inculcate a habit of saving and you will be benefited by this habit in the long run, and it will be passed over to your future generations also, and it will be a very good sign. And by investing in life insurance, you will be in a habit of disciplined investing. And as you know that under section 80C of the Income Tax Act 1961, the premium paid on policy that qualifies under section 80C, so deduction is also provided under 80C. So it is helpful in saving of tax, in reducing our tax liability also. Now, what are the various types? What are the various kinds of life insurance policies? Various types are there, but mainly I will be discussing with you a few policies, a few types. These are term life insurance, or popularly known as term plan, a whole time insurance plan, ULIP, a unit linked insurance plan, which is very popular these days, endowment plan, money back plan, and group life insurance plan. So let us discuss these one by one. First of all, term life insurance, term plan. I think various advertisements are there on television, on FM radio, and even in the newspapers, you will find the advertisement regarding term plan. You see, it is the simplest form of life insurance. What is there in the case of term life plan? That let us suppose you have taken the term plan for, you may say, up to the age of 60 years, and now let us suppose you are 25 years of age. Then what will be there? You will have to pay the amount that is not too much. I will not say that is very nominal, but very, very reasonable rather. And you will be paying the amount till the age of 60. In case, unfortunately, in case some mishappening is there during the period of the policy, and you are not able to attain the age of 60, then in that case, large amount, basically you may say 50 lakhs, 1 crore, that will be selected by you only. It will be provided to your nominee, it will be provided to your family members. But the biggest disadvantage of term plan is that in case the person is able to survive, and he is able to reach the age of 60 years, in that case he will not be getting anything. Even the premiums paid will not be given back to him. So kindly note that in case of term plan, the protection is given for a specified time period, and in case some mishappening is there during that period, the benefit will be given to the nominee, but not otherwise. The main attraction is that the sum assured is too large, that is huge amount is paid. You may say 50 lakhs, 1 crore at the time of death. So, and nowadays, in order to overcome this deficiency, this limitation, various other types of policies have also come into the market, and various other riders are also available. It may be accidental death benefit, child support rider, you may also those riders, but still a number of persons avoid this policy, as they say that there is no maturity value in this case, in this plan, so they avoid buying term plans. As I have already told you that the policy holder will not be getting anything, not even a single rupee, in case he or she survives the term. So that may be considered as the biggest limitation also. But one advice I would like to give, that insurance should be treated as an expense, it should not be treated as an investment in case of term plan. Now, whole life insurance plan. Now, what is there in whole life insurance plan? You see, this plan offers coverage till the death of the policyholder. It may be 70 years, 72, 75, 80. So coverage will be given till the death of the policyholder. So, and at the same time, premium will also be collected. You will have to pay the premium for entire life, and it will be more than the premium that was there in term insurance. So it covers life for 99 years, 100 years, and kindly note that it has an investment component, and it acquires cash value over time. The amount will definitely be paid to the nominee on the death of the policyholder. So surety is there. It is not so that in case the person is paying premium, he will not be getting anything. Here he will be getting the sum assured. He means his family, his nominee. Now, ULIP. unit linked insurance plan. It is very popular. The reason behind its popularity, the reason behind its attractiveness, it provides the benefit of insurance as well as investment. Both the benefits are provided by ULIP plan. Now, what is ULIP plan? Under this plan, as you know that as a policyholder, in order to take insurance policy, you will have to pay premium. You will be paying premium, but what is unique in this plan, that a portion of that premium, that amount of premium will be going towards insurance, and the remaining portion will be invested in, you may say, investments like equity funds, debt funds, and other security. And the another beauty of this particular plan is that the investor may switch their premiums between the different funds that are available. Now, endowment plan. Now, what is endowment plan? Again, these are very attractive. The reason behind their attractiveness, the reason behind their acceptance is also provides the benefit of insurance and saving at the same time. So insurance as well as saving, two types of benefits are provided by endowment plan. In case the policy is it may be for 15 years, 20 years, 25 years, and it provides maturity benefit to the life insured. At the time of maturity, a lump sum assured will be given to the policyholder, and it may be with profit or without profit. Nothing will be paid during the lifetime. I will be telling where it is paid. So it may be with profit and it may also be without profit. In case of with profit, the premium will be, they are bound to be somewhat more, but in case of without profit plans, the premium will not be much more. And which type of plan to take, it will depend upon your age, your risk appetite, and various other factors. Now, money back plan. Now, what is money back? As its name signifies, some money will be given back, some money will be paid to you at the end of a particular period. So you may say that a particular percentage will be given back to you at periodic intervals in terms of survival benefits. Let us suppose you have taken the policy for 20 years. So the terms and condition may be that after 4 years you are getting 10%, let us suppose, and after 8 years you are again getting 10%, and on maturity you will be getting the remaining amount of the sum assured that will be given to you at that particular point of time. But in case some mishappening is there, in case some unfortunate death of the policyholder is there, but that is during the term of the policy, in that case no deduction will be made, and the nominee will be given the entire sum. Now, group life insurance. Now, first of all, what is group life insurance? Group life insurance is, as far as we have discussed till this time, we have discussed the individual life plans, but what is there in group life insurance plan? It is very much clear from its name only. It covers basically a group. It may be at least 10 persons may be covered, and this plan is basically taken by employers, banks, companies in order to insure their employees. It will again be providing financial protection to the employee's family, and it will also be protecting the employer also. One thing that should be noted, that under this plan, under group life insurance plan, the plan under which the group is covered, it is known as master plan, and the policy is issued to the managers of the group, that is master, but it will be there, it will remain in the name of the group only. And one very significant point to be noted in this case is, a person is covered under this scheme till he is a part of the group. Once you leave the group, once the group is left by the person, his cover will also be coming to an end. It should be kept. Now, after discussing so many types of policies, I have discussed with you ULIP, I have discussed with you endowment plan, money back plan, term plan, and various other plans. Now the question arises, how to choose, how to select the best policy. So there is no hard and fast rule, but a few points must be kept in mind while selecting the life insurance policy. The first is goal. What is your goal? What is your objective to be achieved? So that particular goal, that particular objective must be kept in mind while selecting your life insurance policy. Similarly, what is the sum assured? What is the sum assured? It is 10 lakh, it is 20 lakhs, 75 lakhs, 1 crore, or even more than that. So that should all selected very carefully. What is the term of the policy? Is it 5 years, 10 years, 15 years, 20 years, 25 years, or up to 100 years of age? So it should be kept in mind. Various riders are there. Rider means that by paying some extra money, by paying some extra amount of money, you will be getting some coverage. It may be relating to accidental coverage, accidental rider may be there, or children rider may be there. So it should be kept in mind, and according to our need it should be selected. Again, we should not be misled by the advertisements, we should not be misled by the agents. Although IRDA is there, they are protecting the interests of the policyholder, but still you should be vigilant. And before going for any policy, you should personally check the claim settlement ratio of that company, particulars of that company, solvency ratio of that company, and various other things relating to financial information of that particular company. Only after discussing, only after going through these factors, you should select some life insurance policy. Now, after discussing that, now the next part is general insurance, non-life insurance. So, what will be there? Kindly note that it covers fire, marine, motor, health, travel, home, and various other types of insurance. It may be crop insurance, it may be any insurance you may say, which is other than life insurance. Then we will be protecting the, you may say, in case of a motor, it will be protecting your vehicle. In case of home, it will be protecting your house. In case of health insurance, it will be protecting, it will be bearing your hospital expenditure and all that. By taking these policies, you will be safeguarding your assets, you will be safeguarding your valuable assets. It may be your house, it may be your motor vehicle, car, bike, and all that, and it may be even useful in traveling. So that is. Now, first of all, what are the basic types of non-life insurance? Basically, you may say no such typical, you may say, classification is there, but I am talking in general. Fire insurance may be there, marine insurance may be there, and miscellaneous insurance may be there. Each and every type of insurance may be covered under miscellaneous insurance. It may cover home insurance, motor insurance, travel insurance, health insurance, and we will be discussing all of these one by one. Now, first of all, what is fire insurance? You see, fire insurance is very much necessary, particularly in case of business. Your valuables are there, and in order to protect your property from the damage that may be caused by fire, you should be taking fire insurance policy, and it will help you in covering the cost of replacement, repair, or reconstruction of the property. You see, once there is, let us suppose, the fire breaks out in some factory in it will cause a huge loss, and in case you have taken fire insurance policy, it will be helping you in replacing, repairing, or reconstructing. The fire insurance policy basically covers the loss that may occur from unexpected event, physical loss, damage, destruction of the building, of structure, plant and machinery, stock, and various others. And it should be noted that various micro level enterprises like office, factories, even restaurants, hotels, they are eligible to take fire insurance. Who needs fire insurance? I would say that every business organization, at least, they should buy fire insurance policy. Even shopkeepers, retailers, godown keepers, storage keepers, firm, institutions, individuals, even household, that it may be there with in relation to furniture, valuable contents, even financial institutions, research institutions, educational institutions, banks, manufacturing companies, non-manufacturing firms. All of these entities should take fire insurance. And what is marine insurance? You see, marine insurance is basically relating to it has great importance in international trade. As you know that the goods are exported, the goods are imported through ships. So marine insurance is basically needed, and it reduces the exposure to risk in case some, you may say, loss is there, particularly in international trade when our goods are in transit, and it will help us in managing risk and improving the resiliency of the business. Home insurance, it is concerned with securing your house and various items in the house, and it will protect you from various types of losses or damages. Motor insurance, now again, it is very much important, and in India, as per the provisions of Motor Insurance Act 1988, it is compulsory also. So what is there? It provides coverage for your vehicle against damage, accident, theft. Basically, it is of two types. Let us discuss these types. First may be third party insurance, and the second is comprehensive insurance policy. Third party insurance, it is mandatory, it is compulsory, it is not optional. You will have to take motor insurance as per the you may say provisions of Motor Vehicle Act 1988. And nowadays, while purchasing a car, while purchasing a bike, you can take the car, you can take the bike out of the showroom after insuring that, at least third party insurance. So it takes care of damage that may be caused by your vehicle to the third party. But in case of third party, the damage that is there to your own vehicle, it is not covered. But in case of comprehensive insurance policy, it will cover your vehicle against fire, earthquake, theft, and it will also provide the coverage to the third party damage and even your own to your own vehicle. So these are basically, the comprehensive insurance policy is somewhat expensive. You will have to pay more premium. Now, travel insurance. We are traveling from one place to another. We are traveling from one country to another. So, travel insurance has also become very significant. Various things may be there, various mishappenings may be there, loss of baggage may be there, trip cancellation may be there, delay in flight may be there, and even while traveling, some medical emergency may arise. So it even offers cashless hospitalization, and it also covers losses due to loss of baggage, trip cancellation, or delay in flight. Now, health insurance. Now, you see, hospitalization is very expensive, and your hard-earned money, which you have earned over years, that may be used within a month, with even days, in case of medical emergency. So that is why health insurance is there. So everyone should take health insurance. It may be relating to only individual, or it may be covering the entire family, and it may be covering a particular disease or a group of diseases. So we should be very careful while selecting the health insurance. Now, what is the difference between life insurance and non-life insurance? You see, life insurance is basically a long-term contract ranging from 5 years, 10 years, 20 years, up to 99 years, up to 100 years even it may be. But non-life insurance like health insurance, you may say motor insurance, these are basically short-term contracts. Secondly, in life insurance, what is there? The benefits and sum assured. These are paid on the maturity, or in case some mishappening is there, so these are paid at the time of the death of the policyholder. But in case of non-life insurance, the claim or actual loss that will be coming into picture only when a specific event will occur. It should be kept in mind. Again, in life insurance, we will have to pay the premium through the entire terms of the policy. It may be 5 year, 10 year, 20 years. So it should be kept in mind. But in non-life insurance, in case premium is paid, in case we want to renew, you should be paying the premium. Otherwise, you may not pay. In case you are not interested in renewing, then in case you want to renew the policy, you will paying premium. Now, next is online insurance. As in the beginning of the chapter, I have told you that we will also be discussing online insurance. You see, nowadays there is digitalization. IT has affected each and every sector of our economy, and the insurance sector is not an exception. It has affected, you may say, every industry you may think of. It is affected by these IT revolution. So we will be restricting our study to insurance. Now, what is online insurance? Online insurance means you are buying insurance policies by sitting in your home, and you are going through the amount of premium. You are surfing various portals like Policy Bazaar and various others in order to compare. You are comparing the policies online, and you are selecting the best policy, that is the best as per your personal requirements. So you see, online insurance is smooth, very smooth, simple, expedient, and very cost effective. Time saving is also there, and you may get the policy, you may buy the policy just by clicking the mouse, even while sitting in your home, in your office, and all that. And you will be getting the quotation, you will be getting even policy within minutes in your email, and you may download the policy and keep it with you. Now, what are the benefits of online insurance? I have already told you, but still it is convenient. No need to hire, no need to involve any agent. Everything is there on the internet. You may compare. Various insurance portals are there, and I have already just told you that while sitting in your home, while sitting in your office, you are able to buy the policy. It is very quick, it is hassle free, it will save your time, it will save your effort, and various companies are providing user friendly interface in order to immediately buy the policy. And in case some difficulty is there, some toll free number will be there, and you may call them and they will be guiding you step by step. Informative. You see what happens when somebody comes to your house, some insurance agent comes to your house, so he will be trying to sell his policy. He will be trying to sell his policy, whereas your requirements may be somewhat different. But in case of online insurance, various online portals are there, and there you can see, you can buy the policy as per your personal requirements. And various online portals are there where you can compare and understand the different policies offered by various companies, various insurance companies, and you may take your informed decision. Now these are affordable. Why I am saying so? You will also find that online policies are somewhat cheaper than the offline plans. Now what is the reason? You will be surprised that why it is so. It is actually so, dear students. The main reason is that due to reduction in overhead, insurance company may pass on some of their saving to you. Similarly, as the agent's commission is eliminated, again some portion of that commission may be passed by the company to you. Then automation. I have already told you, automated. It is very easy, it is very simple to use, and various safe and secure online payment modes are there. You should not worry. You will be getting premium quotations. You can download a policy document. You can file claims through online mode, and you can even track your investments through online mode. And in case of some difficulty, quick assistance is available. Live chat is there, and you may say toll free number is given. They, even in case of policy bazaar, they will be helping you, they will be giving you phone number, and they will also be reminding you ki whenever your policy will be going to expire. Safe, it is very safe. Secured servers are there, and full protection is given to your sensitive information, confidential information, and it is never misused. Similarly, while purchasing the policy, you may also go through, you may also keep in mind the reviews and comments by other consumers, and it will be helping, it will be helpful to you in taking the right decision, in taking the informed decision. So okay students, thank you. So with this we have completed our lecture on types of insurance and online insurance. Okay then, thank you.